Hello traders, welcome to the channel. My name is André Cardoso. As always, it's a pleasure to share my work with you. Thank you for being here. And for today I have a special promotion to share with you, so stay tuned. But first of all, let's take a look at the Forex market. I have a bunch of pairs to share with you between the Forex, the commodities, gold, silver, crude oil, SPX 500, German DAX, and we will finish with Bitcoin. Let's start with the DXY, subject of very strong bearish momentum. And we saw that once Donald Trump starts to implement all the tariffs, as some of you are already aware, and once that happens, we have also the bearish scrap pattern completed at 109.86 or 85 actually. We saw that pattern starting to form. We anticipated the formation of that pattern, but also the formation of a sequence or Elliott 5-wave sequence to the upside, where wave 5 equals wave 1. So basically we have multiple patterns completed at 109 or at the same price zone, let's say, and the bearish scrap pattern completed at 109.85, the golden Fibonacci extension level. So I posted this chart on TradingView, but also of course on Forex Analytics for the entire community. So basically we were already well prepared for the possibility of a retracement from these levels. Of course, we were not expecting the full pullback for the DXY, and that's exactly what happens. The DXY retraced back to the previous support level, $100.15, the monthly fractal support from last September. So basically the DXY remains below this monthly fractal support level, and in fact if you go into a lower time frame you can see there's a new daily fractal resistance at $100.37, putting more pressure to the downside for the DXY. At this point we are let's say bouncing or dealing with the potential structure support of what we may call an ascending channel or ascending parallel consolidation channel, and we have a range very well established between the daily fractal resistance $100.37, $97.92. It's the support level. Nothing very specific to see or to say for the DXY. I was expecting the formation of these heads and shoulders, that inverted heads and shoulders, which remains possible, but at this point we always depend on the violation above what we may call also a potential flag pattern. There's a lower degree flag pattern starting to unfold, so we need to see a violation of the highs of that pattern to consider a potential move towards the 200% Fibonacci level. Even though as I said, the bearish pressure remains strong for on the DXY, and we should not avoid, or let's say we should not ignore the possibility for a retest of the lows and eventually the continuation of a bearish momentum for the DXY. Of course, if the DXY starts to pull back again, some of the dollar-related pairs, as the pound, the Aussie, the Kiwi, and the fiber, all of them should trade higher. So if the DXY pulls back into the previous support level, we may see the pound breaking above the resistance. We may see the euro-dollar starting to recover above this internal or intraday resistance at 114.24. We may see the Aussie, instead of pulling back inside this kind of a descending wedge, we may see the Aussie starting to bounce without breaking these previous resistance levels. And the same may happen for the Kiwi. We may see the Kiwi breaking above the resistance and eventually triggering this lower time frame or lower degree cup and handle pattern formation. But let's first of all discuss the pound. Cup and handle pattern formation on a higher degree, or let's say a higher time frame. You can see this on a daily time frame chart, kind of a cup. We need the handle. Usually I track the possibility to form the handle with the Fibonacci retracement levels. We have the very first Fibonacci level only at 131.26, which implies a violation of the neckline for this head and shoulders pattern formation. So stay tuned with this potential head and shoulders pattern for the pound. If the price breaks below 132.33, we may see the retracement for the pounds. Even though if you are considering the edging shoulders, we need to wait for the violation of the support. Don't try to anticipate the move, because this may actually work also as a potential or the eventual triangle. Okay, so pay attention to this. Nothing is granted. We always need a confirmation. So only a clear violation of the support will trigger and validate the edging shoulders pattern formation. Okay, that's something that I need to see in order to form the handle for this cup. Okay, that's something that I'm expecting. Of course, I can be wrong and the market will keep trading higher, breaking resistance, and that may trigger more momentum, of course, for the cable. The same may happen for the fiber. If the price starts to break above the resistance levels, we may see we may see the retest of these highs again, eventually unfolding into a potential cup and handle pattern formation also for the fiber. We are far away from that to happen. For now, we have what we may call a potential bearish flag pattern, nailing or retesting, let's say, retesting the neckline, right above the neckline, 112.64, wait for a clear violation of the support level. And by the way, every time we identify a visual shape of this pattern, usually this support level, if the price fails to trigger the pattern, that support will offer a very strong support to the upside. So always wait for the confirmation for the violation of the support. Okay, always wait for the confirmation. Aussie, very much the same. As I said, we are inside of what we may call an ascending wedge. Something that can happen, it's a potential edge and shoulders pattern formation. It may take a lot of time to unfold into this higher time frame reversal price behavior, but that's something to consider. Very similar price behavior, at least in time, the time that we needed to form, let's say, the left shoulder. I will assume that's the same time we will need to form the right shoulder. So as you can see, may take a lot of time to unfold. But at this point, and on a lower time frame, on a lower scale, we are inside of what we may call kind of an ascending wedge. So basically we see the Aussie starting to reject again the trend line resistance and eventually approach the lows or the structure support again. Let's see how the market unfolds from here. Nothing more to say. Actually, nothing more to say for the Aussie while above the weekly fractal resistance. The previous highs at 63.91. So while above these levels, and the market may retest these levels again, but while above these weekly fractal resistance, I assume the Aussie is well bidded to trade even higher. The same may happen for the Kiwi, the New Zealand versus the dollar, already broken the resistance level, but also, and more important, recovered the previous support level. This is the monthly fractal support at 58.49. I will not say again, the price may be forced to retest this support level again. I have nothing, I have nothing that points me in that direction, at least for now, and this can unfold into a double top. Let's see how the market unfolds here, but we have a nice support here at 58.93, and this support may act later as a neckline for the double top if the price approaches the support level again. But at this point, we also consider the potential cup and handle pattern formation. So at this point, very much nothing to say for the Kiwi, very similar as the Aussie, similar situations here. The dollar versus the CHF, I will wait for the pullback towards the golden Fibonacci level, 81.51. 61.8% Fibonacci retracement may offer support, and just because it may offer support not only for the right shoulder, kind of an orthodox edge and shoulders, reversal edge and shoulders pattern formation, but it can also work as a support for a correction, an ABC correction, or even an ABCD pattern if you wish, a three-wave swing to the upside towards at least a 38% Fibonacci level, 84.82. So that's something that we should also consider. At least that I am considering. I will wait for the pullback towards the 61.8. That may offer me a nice risk-reward approach. I have 1.3%. I have my previous support. We have supported 1.33% below the golden Fibonacci level, and it may offer you a nice opportunity to try to to recover the Swiss franc. The same may happen for the dollar versus the Canadian. We have a descending wedge, or what we may call in the future, let's wait out how it will unfold, ending diagonal, kind of, but the structure is clear. We have resistance at 139.04, we have support at 137.60, highs and lows of the pattern, so wait for a clear violation of these levels in order to trade higher, or in order to expect a more bearish momentum for the Canadian. The dollar versus the Mexican peso, clear bearish momentum here, bearish flag actually starting to unfold. We have support at 1948, resistance already. Actually, the resistance, it's a previous support level, the previous weekly support at 1983. Basically now acts as a resistance level. We need to see the price recovering these lows in order to consider more momentum or expect more momentum to the upside. But at this point, and it looks like the Mexican peso is unfolding into what we may call a bearish flag pattern. 200% Fibonacci extension, 1927, default target for the head and shoulders pattern formation, and if the price approaches these 1906, we may see the formation of a bullish crab pattern at the golden Fibonacci extension level. 1906, that's a level that we will pay attention for sure, rather than the violation of the support level, which may trigger the momentum to the downside. Now we have also the dollar versus the Japanese yen and other Japanese yen pairs, which are facing what I can consider a strong support level. So as you can see, the dollar versus the Japanese yen has found support very much right above the 61.8, 142.20. I may assume the price, may unfold into a three-wave structure to the upside, eventually achieving the default target for this shark pattern. We have a shark pattern completed at the golden Fibonacci level. That pattern usually forces the price to move towards the 50% Fibonacci level. We have a new lower low. Of course, we need to adjust your targets to these lows, but I always assume the price will achieve those levels, especially when the price starts to move in the direction of the pattern at some point. So golden Fibonacci 142.20 as potential support. Eventually we may see the price unfolding into a three-wave structure to the upside. The same may happen for the pound versus the Japanese yen, a move to the upside. Eventually more shy, I'm expecting kind of a head and shoulders pattern formation for the pound versus the Japanese yen, even though don't ignore the possibility, as I said multiple times, the support level or the neckline for the head and shoulders. Usually it's a nice price zone to find. It may offer nice risk reward for those who try to engage the market to the upside. You have a nice support already reinforced, so I will assume the price may sustain above these levels, and only a violation of these levels will trigger the head and shoulders. So again, don't try to anticipate the market or the pattern itself, because the pattern will only be confirmed with the violation of the support. So for the pound versus the Japanese yen, two options. One of them lies on the right shoulder, the formation of the right shoulder, and then the trigger of these head and shoulders, or a move to the upside and the formation of this bearish bat pattern, which remains as one of the possibilities for the pair, 194.65. If the price approaches this 88.6% Fibonacci level, it may be forced to pull back again. We are far away from those levels for now. For now, we are tracking the possibility to unfold into this potential right shoulder. We have also the Aussie versus the Japanese yen, a nice reaction after completing the bullish scrap pattern. Actually, not very much more to say except the possibility of a retest of these highs. We have a weekly fractal resistance at 95.74, and if the price approaches these levels again, I think we should pay attention to the possibility of a bearish BAT pattern or a bearish alt BAT patterns to start to unfold. So again, we are far away from those levels. I'm just considering the Fibonacci ratios at our disposal at this point, and based on the Fibonacci's that we have, there's only one pattern. Actually, there's another one that I know, you know, it will extend to the golden Fibonacci. It's much far from this one. So basically, we have the 113% Fibonacci extension at 97. And you have the golden Fibonacci at 161 at 101.74. So basically a retest of the weekly fractal resistance may help the formation of this bearish alt BAT pattern. Okay, if that happens, I will assume the price will pull back again. As I said, for now we are far away. I will pay attention to that pattern once we approach this weekly fractal resistance. The same happens for the New Zealand versus the Japanese yuan. Different pattern. The New Zealand unfolding into a potential bearish shark pattern. One of them completed at 85.43, providing just a very shy retracement, and then the price starts to bounce again and move forward towards the previous highs and breaking the highs again. So if the price approaches this weekly fractal, 87.59, 87.60, you have another bearish shark pattern, which may offer another pullback for the New Zealand versus the Japanese yen. Let's jump into the euro versus the pound inside of an expanding triangle. At this point, everything can change if the price starts to pull back again without reinforcing these highs. We may see this as a potential descending wedge. It may change a little bit, but even though we have a range between the daily fractal resistance and the most recent support level, and let me try to track this one too, at 84.62. So that's the range for now for the pair. So we're still inside that range. I have in very much the same situation here for the euro versus the pound. We are far away from those patterns. I'm only considering the Fibonacci ratios and variables, the price printed so far, and based on those, I have a bullish BAT pattern projected at 83.63, and that pattern converges with the default target for the edge and shoulders printed above. So as you can see, we're still rejecting the idea to recover above this neckline, 85.18, and the price starts to pull back again. So I will assume the price will resume the momentum to the downside, and eventually we'll achieve our default targets, 83.52. That's a 200% Fibonacci level, and we have also the bullish BAT pattern a few points above for the euro versus the pound. Euro versus the Aussie, now retesting the previous structure support level. As you can see, we have a trend line support holding all these lows and transformed into a resistance. So if the price, I will assume, if the price recovers this trend line support, now acting as a resistance, we'll turn it into a support again, and the price will start to attempt to recover. Very much the same situation here for the euro versus the Aussie. We have kind of a double top. We have kind of we have a default target for that pattern at 171.60, and the 88.6% Fibonacci retracement level, the 88.6% at 172.16. That's another bullish pattern to consider if the price approaches those levels. The pound versus the Aussie, I'm expecting the formation of a bullish bat pattern at 2.0148, basically back to the weekly fractal resistance. For now, we are stuck inside the previous support, now acting as resistance at 207.22, and the previous daily fractal support basically acting as a range market to the downside, or a barrier to the downside, and a range market at 2.0477. So that's the range for now. I will assume the market, will retest these previous structure resistance again. Based on the Fibonacci ratios that we have, we can also anticipate the formation of another bullish bat pattern, this one nailing the previous resistance level, as I said, 201.50. That's the 113% Fibonacci extension level. The pound versus the New Zealand, multiple patterns here. Actually, let me decrease my time frame. We have the bearish shark pattern at 2.2563. This was the golden Fibonacci 161.8% Fibonacci level. We have a kind of a period of consolidation, a nice range market there to track, and once the price breaks below the support, we saw the price starting to pull back. Bullish bat pattern completed at 2.2193, and we have now the possibility of a new bounce. Actually, the price already bounced from the previous lows again. This may act as a false break of support, so we have the previous support and the threat to violation of that same support failed, with the price starting to bounce. If the price breaks above this resistance placed at 2.2381, if the price breaks above these levels, that will confirm the false breakout of support. Every time that happens, the market offers you a very strong probability to search for the golden Fibonacci extension. Every time you are able to identify the false break of a support level or a false break of a resistance, if inverted, of course, we may see the price searching for the golden Fibonacci. Again, if the price breaks above the previous resistance, that will confirm the false violation of support. And if that happens, the market tends, with a higher probability, tends to search for the golden Fibonacci extension. That same sequence, my friend, will complete the bearish shark pattern again. Example, previous support, false violation of the support, golden Fibonacci extension, consolidation, a retracement. Exactly the same situation. If the price breaks above 223.81, wait for a retest or an approach to these previous highs. 225.06 golden Fibonacci extension, and that may offer you at least a 50% Fibonacci retracement back to, basically, let me put the price there, back to 223.42. Okay, that's the default expectation for the shark pattern, and that's something that you should consider. So for the pound versus the New Zealand, and to finish with the Forex market for today, wait for the violation of the resistance that may trigger a bullish momentum towards the golden Fibonacci level. We are talking about something like 0.5%, 124 pips above the resistance level, or kind of. So that may offer you a nice move to the upside, and if that pattern completes, we wait for the pullback. Now let's move forward and change into the commodity market. Let's talk about the gold. We have a very strong momentum on gold to the upside. The momentum, it's not changed a little bit, so basically we're still inside a bullish momentum for the gold market. Nothing has changed. Basically, we saw after the formation of a new high, we are seeing the market unfolding into a potential cup, and the formation and approached the formation of the shark pattern at 34.46, 78.6% Fibonacci retracement acting as resistance, and we saw gold pulling back. I will not be surprised to see a new swing low on gold, very similar on what we are expecting for the euro dollar, consolidation of the flag pattern, and you can see these on a lower time frame. If you go into a 1 hour time frame, you can see gold starting to unfold into kind of a flag or lower degree flag pattern formation. So I will not be surprised to see gold trading lower, even though attention to this cup and handle pattern formation. It's not the first one, it will not be the last one. We have multiple cup and handle pattern formations for gold on multiple time frames, so that's something to consider. Wait for a clear violation of the resistance, which may trigger more upside momentum also for gold. Of course, that will always depend on the DXY. If the DXY starts to bounce and starts to recover, we will expect the gold market to pull back. Not always, but usually. Now let's jump into silver market facing structure resistance. We saw the formation or an approach to this bearish pattern, and we are monitoring at this point this kind of a descending triangle or a descending wedge, with silver rejecting again this trendline resistance, or let's say reinforcing this trendline resistance again. So don't get surprised to see, a new pullback or more downside momentum also for silver. Let's track also the Fibonacci levels right there. We are now facing the very first level of Fibonacci, 23.6. The 38.6 lies at 32.64, back to the previous resistance level, the intraday resistance. So don't get surprised to see a move towards these levels of resistance and previous support levels, even though considering the Fibonacci ratios, and again, and this is one of those situations where we are far away from that pattern to complete, but one of the possibilities, it's actually a move towards the previous highs in the golden Fibonacci level and the completion of a crab pattern at $34.69. We need to wait for a clear violation of these fractals, specifically above the weekly fractal resistance. If that happens, we may see a nice continuation, move to the upside. So pay attention also on silver, on the silver market and those fractals. We have crude oil, very much the same. We are facing resistance at a 50% Fibonacci level, potential false breakout of support. We are now threatening the previous resistance level. If crude recovers above this fractal support, this fractal resistance level at $60.12, basically that will confirm the false break of support. And as I said multiple times and a few moments ago, the market will search for the golden Fibonacci extension. The market tends to search for the 161.8% Fibonacci extension level of the last swing low. Basically, you just need to measure the last swing low and project the golden Fibonacci above the resistance. So that being said, pay attention to a clear violation of these highs on crude and the formation of this shark pattern, which only will materialize at $62.87. Now, as I said at the beginning of my video for today, we have a special promotion running at Forex Analytix, so stay tuned to this one.
Transform your trading with Forex Analytix' new platform. Introducing the complete market analysis platform, precision analysis, real-time insights. Subscribe today and save 40% on monthly subscriptions. Join us now and elevate your trading strategy.
And let's move forward. And let's check SPX 500. I posted this pattern before on Twitter, expecting the formation of a bearish alt-bat pattern at 59.24. I still expecting that pattern to form above the resistance, and the reason why I will wait for that pattern to form is because a lot of people are already familiar with this kind of a M-shaped pattern formation. So this is a kind of a bat pattern. In this case, it's a Gartley pattern at 127% Fibonacci. A lot of people are aware of these patterns, and usually when a lot of people pay attention to this specific pattern formation, the marketeers usually push the prices to the stop levels. And if you are pushing your trades to the downside from this price zone, which I'm not saying it will not work, but usually you will put your stops above the previous highs, and that's where the pattern will complete. After hunting all those stops above the resistance, the pattern forms at 59.24, and then we may see a deeper retracement for the pair. Again, for the SPX 500 in this case. Again, I'm not saying the pattern completed at 56.98 will not work. In fact, the market has started to pull back a little bit already. But it may take, may take more time to unfold into a deeper retracement from here without breaking these highs. I'm not saying it will not work, but in terms of in terms of risk reward and the probability for the price to work in my favor, in this particular situation, I prefer to wait for the 59.24. And there's another reason why, because usually those patterns, the Gartley pattern in particular, the cipher, the bat pattern, usually they are formed inside what we may call a range market. Okay, so we have a highs and a low, and inside these highs and lows, the market will form those patterns: the cipher, the Gartley, or the bat pattern. Usually, those are patterns that I tend to search above at the highs of a structure. Okay, well, I tend to identify those patterns inside the range after a very strong move to the upside, not after a very strong move to the downside, and in particular after a very strong recover, kind of a V-shaped recover from the recent fall or from the recent drop. Okay, usually when the price recovers with a very strong V-shaped recovery, I tend to search for extensions and not the retracement levels of this range. Okay, so that being said, I will not say the price will not pull back from these levels, and eventually that Gartley pattern will offer you a very interesting position to the downside. But in my personal opinion, I prefer to wait for a violation of the highs, a threat to break above the resistance, hunting all those stops above, and once that happens, eventually that pattern will work for me. So this is my approach for the SPX 500. The German DAX also approaching the resistance level, the weekly fractal resistance. I posted this also on Twitter, eventually unfolding into this eventual cup and handle pattern formation, so we need to wait for the handle to form, and again I will pay attention to the Fibonacci retracement levels to complete that handle for the cup. And to finish with the Bitcoin, of course, as I said before, we will finish with the cryptocurrency. We have multiple patterns completed for Bitcoin at 97,600, so I will assume the price needs to pull back. But we are also unfolding into what we may call an expanding triangle, or an expanding wedge, ascending wedge pattern if you prefer, which may imply a new higher high. So if the price pushes to a new higher high, it's still possible to unfold into this shark pattern and crab patterns, actually multiple patterns completed there. And if that happens, I will assume the price will at some point start to pull back. For now, and considering what we have at this point, we may see this as eventual double top formation. Okay, let's wait and see, but for now it looks like the cryptocurrency is rejecting the idea, at least for now, as I said, to break above the previous resistance. If that persists, that will turn into a support level, into a neckline at 93.33, and if that happens, we will pay attention to how the double top will unfold. For now, it's too soon to predict that price behavior. Nothing more to add for Bitcoin, and that's all for today. I hope you enjoy and take some useful information from the video from today, and don't forget to visit forexanalytics.com, and from there you can get access to this amazing promotion that I shared with you moments ago. Stay tuned, safe trades for all of you, and see you in the next video.